Welcome to yet another edition of FMR Finance Weekly video dedicated for NRIs. We would extend our heartfelt gratitude to all our NRI friends for all their overwhelming response and appreciation to our videos. Your reviews and feedback are very valuable and guides us to make further refinement and identify areas where you need further information. We value and appreciate your feedback. Now we come to our today's topic of discussion, banking made easy for NRIs. We'll discuss about which type of bank account can be opened by NRIs, primarily non-resident external account and non-resident ordinary account. We'll delve deep on the importance of both NRE and NRO accounts, their suitability and the edge that one holds over the other from the standpoint of repatriation of funds to your home country and the applicability of tax on the income earned and few other important points. We'll also be exploring the key points that NRI need to be aware of while making repatriation of funds and the documents required while making a remittance. I will tell you about yet another kind of account that NRIs can open along with its key features towards the end of the video. You will find a lot of material information in each of these topics and we shall cover them over 2 videos. I would highly recommend that you watch both this week and the next week's video. So stay tuned till the end of both videos. I am Chetan Nagar, your tax advisor, making finance friendly.
FMR Finance Weekly. Simplify your life with our financial advice.
Without delay, let's dive straight into today's topic. Now, according to RBI regulations and guidelines laid by Foreign Exchange Management Act (FEMA), NRIs are restricted from opening and operating a regular resident saving account. It is essential for you as an NRI to open NRE or NRO account to do any banking transactions in India. However, depending upon your transactional requirements, you can decide to open either an NRE or NRO account or even both. Let's understand these two banking accounts, the NRE account and its sidekick, the NRO account. Picture this, you are an NRI hustling hard and earning some income abroad. Well, the NRE account is just the right account for you to open in India for depositing your foreign earnings safely and securely. The NRE accounts provide complete security and is denominated in Indian rupee. These accounts can be in the form of savings, current, recurring or fixed deposits. When you deposit foreign currency, it gets converted to Indian rupees. One thing you must be aware of is that the amount you deposit into NRE account, it must be earned or generated outside of India. But wait, there's more. Enter the NRO account, your go-to bank account for managing all the income earned right there in India. Whether it's rental income, dividends, pension or even interest, this account is the one account you must have in India. These accounts can be in the form of savings or current account. As NRA, you can deposit and manage your Indian rupee funds through NRO accounts easily. In NRO account, you are allowed to receive funds in both Indian or foreign currency. You are also allowed to transfer money from your present NRE account. So whether you are earning income overseas or you are earning income right here in India, these accounts are must have in India, ensuring your earnings are deposited in right accounts safely, irrespective of where they have originated from. Next up, let's explore how each of these accounts, NRE and NRO, stacks up against the other. It's time for a head-to-head comparison. First, let's see which is better from taxation standpoint. When you park your cash in an NRE account, your money virtually is tax-free in India. Yes, you heard it right. Both the principal amount and the interest you earn on it are not taxable in India. This is where NRE accounts differ from NRO accounts. With NRO accounts, while your money still grows, any interest earned on it is taxable in India. The organization that pays interest will withhold 30% of your income as tax. That is, tax is deducted at source. You will have to file income tax return in India and based on the tax slabs applicable on your taxable income, you may get a full or partial refund of this tedious amount. Now you may be thinking that since NRE accounts are tax-free, we should make investments through NRE account only instead of NRO account. Well, tax-free in India does not mean tax-free in country where you currently reside. You will have to report this income in your resident country, tax returns filing, and will have to pay taxes as per your host country tax rules. There is no evasion of tax. In your host country, you will also be required to report your income earned from investments made via NRO account and also report the taxes paid on any of those earnings. If there are any double taxation avoidance agreements executed between India and your host country, you can avail the benefit of the same and receive tax credits while filing your tax returns in host country. Now, the second most important distinction between NRO and NRE is with regard to remittances. Let's begin by understanding the types of income sources that can be repatriated by NRIs. These can include any income made by you in India. Here are the different sources of income in India which can be repatriated abroad. First, funds that you have held in India before you moved abroad. Second, any funds you received in the form of inheritance in India. Third, income which you made through Indian assets like rent from properties, mutual funds, or any other investments. Fourth, funds that you have transferred to India as overseas remittances. These funds can include money for investments or money you transferred to India for savings. You can opt for an NRE account repatriation or repatriation from an NRO account. There are repatriation guidelines and limitations for either type of account you hold in India. Let us look at NRE account repatriation guidelines. The principal amount in an NRE account and the interest amount accumulated thereon is open to outward remittances or repatriation. In other words, you can transfer the complete amount held in your NRE account to any foreign account you have anywhere in the world. You don't have any restrictions and also don't need any kind of additional documentation or external certifications. This is definitely an edge that NRE accounts hold over NRO accounts as they have limited access for repatriation. There are restrictions on the amount of money that you may repatriate during a single financial year from an NRO account. A NRO account restricts you from remitting more than $1 million inclusive of taxes during a financial year. This limit is not applicable to the interest amount that you can repatriate freely. For the principal amount repatriation, there are additional documents that are required. Some of these documents are: first, you will need to file a request to your bank to initiate the repatriation process. 2. Form 15CA. This is a declaration by the NRI or PIO to the Income Tax Department regarding the purpose of remittance and tax compliance. 3. Form 15CB is another form that is mandatory to be submitted. This is a certificate issued by a chartered accountant certifying that you have complied with all tax laws and regulations and discharged all liable tax dues on the amount being repatriated. 4th, Form A2, FEMA Declaration Form, needs to be filled and submitted to your bank. 5th, Copy of PAN card, Permanent Account Number card issued by the Indian tax authorities. 6th, Evidence of the source of funds, documentations validating the source of funds such as rent agreements, dividend statements, copy of sale deed in case of sale of property, etc. 7. Copy of passport, identification documents verifying the NRI status. In case where NRI wish to repatriate amounts exceeding $1 million in a financial year for non-current income, then it is mandatory to apply for RBI clearance. However, current income remittances do not require RBI clearance. Today, we learned about the fundamentals of NRE and NRO accounts, examined which is preferable from the perspective of taxes or remittances, and learned about the many types of documentations needed to transfer money through each of these accounts. Next week, we'll examine the holding structure of NRE and NRO accounts as well as their suitability from the standpoint of NRIs. And lastly, we'll discuss about the special account I mentioned at the beginning of my video. So watch out for our next week's video. Till then, stay informed and stay empowered, and don't forget to like and subscribe to our YouTube channel FileMyReturn. I am Chaitanya Garg, your tax advisor, making finance friendly.
FMR Finance Weekly. Simplify your life with our financial advice.